I lost $4,000 day trading, and this is what I learned. In trading, losses are inevitable.
I am inevitable.
I'm a full-time trader now for many years, and you're about to see my recent losing trades.
Oh my gosh, she lost money. Is she even a real trader?
Here's the reality. I had a negative $2,338 red day on a Monday, so that's not exactly how I wanted to start the week. And just next day, I had a very nice green day with a net profit of $2,387, which fully recovered the loss on Monday. And then just 2 days later, boom, another $2,000 loss. It's just one of those days, guys and girls. And here's how the rest of the week actually went. I've been trading stocks for over 10 years now, and I make videos about trading strategies, basics for beginners, and my live trading recaps. My purpose of sharing those losing trades is to show you how I review my trades and identify the mistakes I need to work on. This is how experienced traders adapt to the market and constantly improve their strategies. And here's the raw truth. Even experienced traders have red days. Again, trading isn't about being green all the time and trying to make money every single day of the week, but to make sure that the losses are a lot smaller than your wins overall. Okay, just in case you're actually addicted to seeing the glorious profitable trades on social media, I've actually shared many other live trading recaps on my winners, like these ones over here. Okay, now that we've seen it, that's great and all. However, I really do believe that newer traders will learn so much more from a review video recapping on losses and how to deal with red days from trading. At least I know that's what really helped me when I was struggling in the first 2 years of my trading journey. No, none of those very pretty screenshots of big 5 or 6-figure wins on social media ever really taught me anything. If anything, they made me feel like I was really falling behind. And if I don't start making $5,000 starting tomorrow, then I have no business learning to trade in the first place. Let me know if you agree with me or disagree, and that's fine too. I welcome your educated debates and opinion. In my personal opinion, if you're serious about becoming a better trader, my losing trades today will give you insights on some of the common trading mistakes that even the most experienced traders have to deal with. And more importantly, I will walk through my thought process and the trading psychology behind my entries and exit executions, what I did well, how I managed my risk, and all the key takeaways that I'll personally be working on improving for my own trading. So if you're down to learn the reality of trading with me, then consider a free subscribe to my channel and smash the like button down below. And here's what you're gonna learn in this video, based on my real trading examples. Number 1, you'll see a review of my trading losses, the reflections and key takeaways. And number 2, you're going to see my go-to strategy in a slower environment for trading small cap stocks, and that's typically the summer season. Even though I lost a lot of money this week trading these strategies, in the long run, this particular setup has made some of my biggest wins. So I think it's still very much worth learning this particular setup. Remember, you shouldn't let just one day or 1 week or even 1 month of trading define your entire trading career. Alright, now let's look at the trade examples I think are valuable for you, the losses and the trading mistakes. The strategy that I've been trading more frequently this month is a small cap stock bag holder short selling setup. You may have seen other traders talk about this strategy a lot, and I've mentioned this many times before in my videos. Okay, what you're seeing on screen right now are my trading executions and charts for the stocks GovX, CING, and VRAX. And just to provide some context, the red downward arrows represent the sells or the short sell entries. So that can be opening a short position or adding to a short position. The green arrows, on the other hand, are buys or buying to cover to exit the short sell. So in this case, the exit or take profit or decreasing my initial short selling positions. So let's go over the first one here on GovX. You can see this one gapped up to around $10, $11 pre-market. Huge overnight gap up. You can see I shorted early on, I think right before the market open, around the 1030s area, off of that key level breakdown on pre-market support, and added some more around the 980s and $10. But I think overall with this particular trade, my mistake is that I set the stops way too tight. You can see I got stopped out 3 times over here. 1, 2, 3 times. Each time I think I'm stopping up for a loss on partial positions, but still added up over time. And you may be able to see that the stock flushed down multiple times to 920s and over here to 880s, but I never covered. It's because I was looking for this huge unwind to the downside towards $8 and 760s. But I didn't realize the stock, because it was so highly shorted, it wasn't gonna go down without a fight. So that's the reason I got stopped out 1, 2, 3 times before the stock eventually, you can see, squeezed a couple more times and then did a unwind move at looking for. So my original thesis on the short side for an all-day unwind was right, but the timing was the issue here. Next, we have a trade on VRAX. You can see some similar mistakes here. Regarding stops, that was set way too tight. You can see this one, instead of gapping up, it gapped down overnight. I was shorted around the 430s area. Not a bad entry on this little pop here. And I started adding a lot more aggressively below $4. So unfortunately, with this one, you can see even despite all the ads, I did not give the stock enough room to breathe. I set my stop loss way too tight around this higher day area around 430s, when in fact, looking at in hindsight, it should have been the pre-market highs around 460s. You want to give these kind of stocks that have gapped down overnight, that triggered SSR, some more room to breathe, especially if they're lower float with a high short interest. So you can see I got stopped out twice here, and then the stock faded. I still have some re-entries here, covered some for small profit, but I was holding on for like another all-day fade to $3 or 250s on the daily chart. I was holding the remainder of the short position for another fade to $3 or below, but I got stopped out everything around the VWAP area at $4, 410s in the afternoons. Out of all the trades we talked about today, CING, this one was the one perhaps I executed the best. And you can see, even though I stopped out here around like $15, 15.10s, I still held the remainder of my position. So after seeing this fake out, I re-added back some more. After that fail follow through, so I got a decent entry around $14, added some more at 13, and covered it all around the $12 area. So this was actually a decent trade. Probably the best out of all the short sales that you saw earlier. Quick reminder, traders, remember to register for the biggest winner trading competition in Canada, hosted by Global X. You can compete for a chance to win $20,000 in cash prizes, all for free. And since you'll be trading a simulated trading account, there's zero risk to your capital. So make sure to sign up with the link down below for a chance to win over $20,000 in cash prizes. Now back to the video. In the big picture on all these trades, 2 losers and 1 winner, here are some things I definitely overlooked. Number 1, the small cap market sentiment this July and August has been very, very bullish overall for the entire summer. Small cap stocks like the one you saw earlier are running for multiple days of breakouts now. They're not simply doing the one-day breakouts and fade. And many of these stocks like VRAX and GovX, they actually have a catalyst that's benefiting the companies, which is the monkeypox breakout. Therefore, I should have foreseen that these stocks specifically, even on the day 2 or day 3 of the breakout, they probably wouldn't have sold off that easily. So if you look at the daily charts on these stocks, even now looking at it, you can see that they look like they're reclaiming multiple daily levels and they're actually consolidating for another leg up. So that's definitely a very important sentiment that I overlooked. The second key data I missed was the very high short interest. So some of these stocks, like the ones I traded, they have very high short interest and they're increasing actually day by day. For example, you can see on my Stocks.io scanner, GovX have now an 82% short interest, and that's now increased from just 68% last week when I traded it. VRAX also has a very high short interest of 36%. Remember, anything over 25% is considered high. Both of these stocks have incredibly high short interest. Remember, stocks that are highly shorted, they have a high chance of a short squeeze if the buying pressure increases and the stocks have low float, which is true for both of these stocks. And that's the reason if you're trading small cap stocks, whether you're long biased or short biased, you really need a reliable source to check the daily short interest for these lower float stocks. If you're long biased, obviously the higher short interest will benefit your trading setups. I gotta give a shout out to my scanner, Stocks.io. They now provide you daily short interest, which is updated at the end of each day, versus other sources and other scanners that update the short interest generally every 2 weeks, which is a huge difference. You can see I made a costly mistake by not noticing the high short interest on these low float stocks sooner, and I lost over $4,000 this week, which is not exactly fun. The third key takeaway here is placing stop losses and risk management overall. As I mentioned in both of these losing trades, I placed my stop losses way too conservatively. I should have given these stocks a lot more room to breathe since the float is pretty low and once again the short interest is high. So you can see on those execution charts over here, the stock stopped me out completely and I realized those losses, $2,000 or so, and they continue to go in the direction I had planned for. So where on the charts over there should I have placed my stop losses? Well, looking back now, the better places would have been the more extreme pre-market highs. Around 650s on GovX and 460s on VRAX. Remember, placing stops and calculating your position sizes according to risk, that's something we covered in the risk management video. And I'm sure you're wondering,
How are you dealing with those losses, Shay?
or maybe you're not even asking and you don't care. That's totally fine too. But my ex-husband is definitely asking me right now. After all, $4,000 of losses in US dollars is not exactly fun. I'm in Canada, so $4,000 US is like $20,000 Canadian. I can pay many months of bills with that money. Remember, sometimes it's possible to have a trade that's executed perfectly, but the market is just not in your favor, so you have to cut the trade at a loss. Even with a well-defined entry criteria and a back-tested strategy and well-placed stop losses, losing trades are still part of the process. But in case you're wondering, this chart over here, this is an example of what a perfect backholder short would look like on the stock ASTS. Fundamentally, this backholder short strategy is built on the idea that most small cap stocks are pumped up or manipulated by no real news. Again, these small cap stocks are companies with really weak fundamentals and financials, and statistically, there's a very high chance and probability of these stocks breaking out, sure, but they'll eventually sell off and come all the way back down, which is why so many traders love to short sell these small cap stocks. Okay, now that we've gone through the goods and the bads, mostly the bads, of this week's trading, let me give you a quick step-by-step walkthrough of how to trade this backholder short strategy. Remember, even though I lost a lot this week trading these particular strategies, in the long run, this setup has made some of my biggest wins this year. So it's still very much worth learning this particular setup. Remember, you shouldn't let just one day, 1 week, or even 1 month of losses define your entire trading career. And also, I honestly really want your opinions on this. Do you actually learn more from these big profit trades or losers like the ones we talked about in this video and me carefully reviewing them? I'm honestly really curious to know, so if you could let me know down below, I really appreciate it. And if you want to see more transparency of me sharing these losses and my reflections like this one, then please consider liking the video down below. Okay, let's talk about this bag holder short sell strategy in detail now. My process of preparing for these kind of trades, they always begin the same way, with finding and scanning for the right kind of stocks to trade during pre-market sessions. Stock selection for this bag holder short setup strategy is extremely crucial. Because if you pick the wrong kind of stocks to trade, if the breakout is really strong, if there's a really good catalyst, and if the short interest is too high, you can get short squeezed. So that's the reason I use my stock scanner, Stocks.io, with a built-in scan over here, this pre-market small cap scan. That's the default I built into the scanner to find these kind of setups every single day. So let's take a look at the criteria really quick here. Every single morning, I'm looking for stock prices for pre-market small cap scan. Prices above $1 per share, volume greater than 100K. Sometimes I increase it to 200K, but in the summer I reduce it a little bit. I want to see at least a 15% overnight gap up. Remember, we're scanning for stocks that gapped up to key daily resistance for this particular bag holder short strategy. Market cap, I want to see less than $1 billion market cap, and that's the scan criteria. Keep it simple. You can add even more filters such as relative volume, float, insider ownership, or even short interest if you like. For example, you can create a scanner scanning just for stocks with very high short interest. But my process at the moment pre-market is just this. Keep it simple. I want to cast a wide net and I come in and look at the specific data for each of these stocks. For example, I'll look at the gap percentage over here, the top gainers on the day. I'll look at the relative volume, how much volume it's trading above the average in the last 14 days. Some other things we mentioned earlier, short interest. So you can see this morning, the gappers all have pretty low short interest compared to GovX and VRAX that we talked about earlier. And of course, we have the insider ownership information. For small cap stocks, those tend to be quite high. And you want to see them high if you are looking for short selling potentials, because like we talked about earlier, higher insider ownership means potentially the insiders have the incentive to sell if the stock gapped up huge overnight. And then we have the hard to borrow stocks pricing check here. You can see how much each broker is charging for the locate prices to short any of these small caps. So you can see, the pricing for a lot of the major brokers. If it's easy to borrow, ETB, that means the stock is free to borrow. So a lot of these small cap runners that you've seen recently, they were picked up on Stock Scanner, such as GDC, GovX, and FFIE. Going back to the HTB hard to borrow stock pricing column there, this is a very important part of the short selling strategy, whether you're trading the bag holder short or the extension daily short I often talked about on this channel. Essentially, whenever you're short selling small cap stocks, you need to be able to access short locates and get those shares to short. And since short selling strategies like these are so profitable, everyone wants to short them. So now there's a locate fee or a borrow fee associated with locating these stocks to short or buying these borrows. They usually range from anywhere less than 1 cent per share to something like 0.2 cents per share. On the higher end, you can see some around 8 cents per share. If you want to learn more details about short locates and how to use this very simple scanner to improve your win rate, then comment scanner down below and I'll send you a detailed video lesson on how to find profitable stocks to trade, especially on the short side. So once you narrow down the stocks that are worth watching to create a potential trading plan, for example, this morning with this gap scan here, I decided to narrow down my focus on MIRA for this particular strategy, bag holder short. So the next step is to go to the daily chart. If I type in MIRA over here, this is the stock I was looking to trade on the short side today. I'll attach a trading execution chart on the side here. So I want to start with the daily chart. I want to see whether the stock is gapping up to some key daily resistance. So you can see this is a stock that ran up a lot back at the end of July and went from $1 to $5. Now this time of the gap up, pre-market, you can see it went to a high of only $3 this time. Let's mark that $3. And around, pre-market low support was around 250. So that's quite a range already during the pre-market trading session. What I'm basically doing right now is identifying all the technical levels, the potential entries, exits, resistance, and key levels. So looking at this, I see the pre-market extreme highs and the little pre-market highs around 280s and the support at 250. Now, if that support breaks down, I know this thing has downside all the way potentially to $2 per share. So seeing how this thing already has faded pre-market, I know, probably there's two ways to play this. Either I use a $3 pop entry, because you can see $3 here, $3 to 320s pre-market highs, a lot of resistance from end of July here. So that could be a potential entry here. Or if the stock stays weak and just cracks that 250 at the open, which it did, then I'm gonna just hammer in short once that pre-market low support has broken down. Remember, this only works because you are retesting a recent resistance that's been created from about a month ago. So that's really recent bag holders on the chart all the way here, above $5, even at $4, $3, and below. I wouldn't be surprised if this stock eventually breaks down to $2 and below. So just showing you on my actual platform, Centerpoint Securities here today. Pre-market, you can see I did not touch the stock at all. It was either gonna spike and test $3 or just break down below the 240, 250s area we talked about. You can see it cracked that really quickly at the open. The stock was just extremely heavy. So I shorted it, 250s, added some more, 230s, 235, 237s, and I started covering around 220s. The rest here, 220, and at the end of the day at 210s. So I didn't really quite get $2 per share and all the way down to prior day's close like I had wanted. But I essentially held this thing for the entire day. And that was the same thesis for GovX and VRAX, except this stock was a lot more straightforward. But I do want to show you some examples of trades that work out perfectly, like this one, and some that are just a little bit more difficult to short sell, or it was a little bit more volatile because of the short interest. What I really recommend you to do is to record your trades and take screenshots of your trades as you watch and practice finding this particular bag holder short setup for yourself on your next trading day tomorrow. I also send out trade ideas for day trading and swing trading every single weekend on Sundays, and that's for free if you want to sign up with a link down below. And if you want to start with the basics and the step-by-step video lessons on my various trading strategies, you can get started with my free beginner playlist over here.